Income Tax 2020, Other Kinds of Income. Come in, relax with Income Tax 2020. Other kinds of income. With regards to our income tax equation, we're going to be up top on the income line, remembering that we can basically break this out into two halves. The top half being basically an income statement, a modified income statement. Bottom half being the calculation of the tax on the taxable income, then applying the credits and payments to get to the amount of the tax refund or amount due. We're focusing up top on the first half, on the top half, basically on our income statement half, thinking about what other items would be included in income. In other words, we went over some of the more common items, the W-2 type of incomes, and some other types of incomes that are common on most tax returns. Now we want to hit on some of those items that are going to be a little bit less common. One, they're less common because possibly they're involved in more complex returns. And two, they're kind of random things that happen fairly often. They're not on every return, but they're things that will definitely come up, and they're things that can be a little bit confusing in terms of where does that go on the tax return. So we want to understand those things when they come up and understand how to put them or data input them into the income tax return. As always, when we're considering about the income line item, we're thinking about a couple different questions. One, is this something that has to be included in income? Is this something that needs to be up top in income? And two, if it is included in income, will it be taxed at the ordinary income rates, the normal progressive rates, or is there some kind of beneficial type of tax rate that will be applied to it? So these are some of those items where we might say, hey, I'm not sure if that should be included in income or not. Now, of course, if we get a form related to it, a Form 1099, for example, then most likely we have to do something with it, or that's an indication that it may very well likely be something we need to report on the tax return. And we're remembering that that 1099 is also being presented to the IRS, so we need to make sure that we either deal with it and or have a justifiable position as to why we didn't include it in on the tax return in the case or event of an audit. But realize that the general rule basically is anything that we get is income unless it's basically stated otherwise. So even if we do not get documentation for it, we could still have items that then would be included in income. Now, first, I'm going to go into some of these items that I think are going to be a little bit more complex, meaning they're going to be dealing with a bit more complex type of returns. We're going to touch in on them more in the future. Those would be things like a business income that would be reported on a Schedule C. Rental income recorded on a Schedule E, typically farm income typically recorded on a Schedule F, and pass-through type of income typically from something like a partnership or an S corporation. Pass-through type entities generally recorded or processed to the individual income tax return with a K-1. So these are items that usually lend more complexity to the tax return, and although they're reported on a separate schedule and included basically on line 1 here up top of our income tax equation or on the actual 1040, they actually include typically a lot of expenses involved in them as well, meaning we're going to basically take the income statement related to a business, Schedule C, or rental income, Schedule E. We're going to net out the income minus the expenses, record basically the net income into the income line item in our income tax equation. So that means that each of these items that we're talking about really is its own income statement that we'll basically be dealing with in another schedule, or most of them will be. And then we're going to take that information and apply basically the net income into the first line item of the 1040. So that's one reason we want to go into these in a little bit more depth in future presentations. Also note that each of these will typically add a substantial amount of complication to the tax return. One, because you will be having to calculate basically net income on a separate schedule, typically, at least for these three up top. And two, because there's usually a lot of other things involved as well, such as you might have credits that could be involved with it. You, of course, need to know what would be deducted with regards to kind of more of a business type of entity. If you're thinking about rental income, you could have passive income kind of information. And you also could have self-employment tax or Social Security and Medicare type of calculations. So it can increase the complexity of the tax return a lot if we're adding Schedule C, E, and F. Now, if it's a Schedule C and it's fairly basic Schedule C, then that's not too bad. But if you get more complex Schedule C, then it gets a little bit more complicated. Definitely adds complication to the tax return. So you want to understand, if you're a tax preparer, exactly what type of returns that you want to do. And if you are getting clients, if you have a client that goes beyond what you're prepared to do, what you have decided to do with regards to your business plan in terms of targeting particular types of clients, and typically that targeting would be either you're going to be doing more tax returns for clients that have similar or easier type of returns, meaning you have a lesser profit margin, but you're doing more returns, or you're focusing in on more complex returns, those returns that have these type of items within them. Schedule C, Schedule E, Schedule Fs, pass-through K1s, generally higher income individuals. You're going to do less return because they're more complex, and you're going to spend a lot more time working on those complex returns and getting into the nuances of things like these added schedules that would be involved and possibly linking to business type of returns like a partnership or S corporation. One of the challenges for a lot of companies is to kind of narrow down what it is they are actually doing, especially smaller type of tax preparers. So if you're focusing in on doing more kind of basic returns, and a client is kind of going outside the scope of what you're focusing in on, you want to be able to let that client go if you need to, and possibly then be working with other CPA firms and whatnot that might specialize in one area or another. So you're not like abandoning anybody, but you want to be able to say, hey, look, this is where my focus is. You are outside of my focus right now. That's not where my business objective is, and then be able to work with a network possibly to kind of pick up and help and support in that way. So just kind of be aware of that. But again, we will then touch in on these type of areas in a little bit more detail later. And obviously, when you get into business income, you can get into a whole course in and of itself, especially if we get down to partnerships and pass-through entities. Also note that rental income could have passive income related to it that you got to kind of deal with. And then farm income is a specialty area in and of itself. So again, that's another area where it's quite likely you have someone that comes in and says, hey, I've got, a Schedule F. And although you might want to pick up the Schedule F, you could probably do the research to do it. You might well say, hey, look, that's a pretty specialty area too. And again, it might be something that you're going to be recommending, possibly have a network that specializes in that type of thing, so that, again, you can focus in on what it is that you are doing. The same with the pass-through entities. If somebody has partnership returns or S corporation returns, we call those pass-through entities, in that they're going to have to file their own tax return, but then that tax will typically flow through. The income will typically flow through with the use of a form K1 form that will then go into the individual tax return. So to put the K1 into that individual tax return isn't too complex, but if you're dealing with someone that has a K1 and they're an active participant, a general partner, or a S corporation owner, it's likely that there might be higher income individuals or have more complex returns. And again, you want to know, are you focusing in that area or not? Do you want to be picking up, say, partnership returns and S corporation returns, or do you want to be working with other tax professionals that focus in there and put your focus in on where you focus individual tax returns, possibly inputting the K1, but possibly not wanting to get into maybe the S corp or the partnership, or maybe you do. But again, you want to know where the focus will be in the tax preparation. So a Schedule C we'll talk more about later, but basically you got another schedule, which is in essence an income statement for a business that will be filled out for it. It'll also affect the self-employment tax and so on. Schedule E, similar, but now we have rental property, and we could have different needs for rental property. One could be that it's passive income. To the IRS thinks of it kind of as passive income. Passive income rules could be taking effect with the rental property. So again, you got to kind of be aware of what those rules will be. We'll talk more about them in the future. And then we got the profit or loss from farming, which is a Schedule F. And this also is similar. It's a business type of income. You're going to have an income statement related to the farming. But again, there's special rules that are different for farming. And we probably won't touch in on this one. If you want to know that one in more detail, you could probably, the whole course in and of itself on the rules related to farming. Some of them will be, of course, similar to business type of rules, meaning expenses that are used in order to help to generate revenue will typically be deductible. But again, there's special kind of rules related to farming. And if you're in a tax practice, You want to be aware of them and be able to know in your mind when you get clients asking about that, is that something you want to pick up or not? Is that something that you can network with other individuals that might pick that up while you pick up, what it is you're focusing in on. Here's a Schedule K1, this one from an S corporation. This is the form that will basically be taking the income from a flow-through entity like a partnership or an S corporation, and then be used to input that data into the individual tax return. Now, if you're using software and you did both the S corporation and the individual tax return, you can link those automatically, and it'll actually link together. We might demonstrate that a little bit in the future when we go into this in a little bit more detail. We have a course on creating an S corporation. We're not going to actually do an S corporation in this course. We're focusing in on the individual income tax. But you might then take that Schedule K and then, of course, enter into the individual income tax return. That's not too difficult. The more complex part is, of course, the preparation of the S corporation income tax return. And again, your question is that something you want to focus in on, or is that something that you want to basically be working with a network to be picking up? Now, then we have other kinds of income. These are things that don't happen all the time, but if you do enough individual income tax returns, they will pop up. And they'll be just confusing. They're usually not big dollar amounts, or oftentimes not, but they're often things where you're just going to go, man, where do I put that on the tax return? Where does that go? Like, how do I record that? So that could be things like prizes and awards. If you have jury duties, sometimes jury duty will be taxable. Oftentimes when you have prizes and awards, you will receive documentation for it, like a 1099 or something. Same with jury duty. If it is taxable, you'll typically receive documentation for it. If you don't receive documentation for it, you're probably going to say, it's not really relevant. What do they get, $50 or something like that? It's probably not a large impact. But if you get a 1099 for it or something like that, then you have to report it, because otherwise you're going to get a letter for sure, because that was given to the IRS. Forgiveness of debt can be a tricky one. It doesn't happen all the time. But in cases where there's a down economy, for example, you might have forgiveness of debt, and forgiveness of debt is basically like income, and oftentimes you'll get, therefore the IRS sees it as income, because they could have paid you or they forgave your debt, which is basically the same as giving you money and then you paid it back to them to pay off the debt. So usually there's a business transaction with forgiveness of debt. There's a reason they forgave the debt, right? Maybe they just felt that they couldn't be paid or something like that, so they forgave the debt, or there's a law that forced them to forgive the debt or whatever. But that usually is considered income, and so you might get a form for that. Insurance proceeds in excess of the adjusted basis of the property. So if you got insurance proceeds greater than the adjusted basis of the property, then you may have income related to that. And gambling winnings. So oftentimes, if you do enough tax returns, you'll run across people that do gambling. You'll have gambling winnings that will be involved as well. And again, you might get some documentation for that, because if it's over a certain amount, the casino's required to give documentation on the winnings. And then, of course, you're going to come across the question of, well, I had losses too. Can I deduct the losses? And you can deduct them possibly, but they'll be on the Schedule A. And if you do not itemize, you're not going to get a benefit typically from the losses. And then we got to record the income, because that's been reported to us typically, right? And so we got to record it, because the IRS has a copy of that. So the losses typically will not, net out, but you possibly could get a benefit from them, so it might be worth saving those up. So prizes and awards. Prizes and awards may be on a 1099. You might get a 1099 miscellaneous. So if you got a prize, and it might not simply be a cash prize, it could be a little bit more confusing when it's not a cash prize. So if you got some kind of prize over, a minimum dollar amount, then they may be required to send out, the 1099 on it, and you'll have to value the item you got. So if it's a cash prize, it'll be fairly straightforward. It might be in line 3 that will be included in here. If it's something else, then they might estimate what the value is, and you want to make sure that you got the proper estimate of what the value of the property is that was received, so that you can report it correctly on the tax return. So that would be in box 3. It says generally report this item as other income of Schedule 1, Form 1040, and identify the payment. The amount shown may be payments received as the beneficiary of a deceased employee, prizes, awards, and so on. So to actually report this on the 1040, the face of the 1040 would be in line 8 typically. Other income from Schedule 1, line 9. And then if you go to Schedule 1, line 9, here's the other income prizes. Now, the data input of this can be a little bit tricky depending on the software. So in the following presentation, we'll actually enter this into the Lacerte software so you can see where, kind of like what the data input will look like as we do that. Then you could have jury duty. So again, jury duty, you're not going to get paid a lot in jury duty. It's probably not significant, but you might get a 1099-G if it was a taxable amount of jury duty that was received. And again, if you don't report it, then you might get a letter from the IRS because the IRS is going to get a letter on the 1099-G as well. So where would you put the 1099-G? Typically, basically in the same area. So we'd say, okay, we got a 1099-G, and so these are the instructions. So if you have questions about the 1099-G, they'll typically come with the instructions if you get one. And you can go to the IRS website, look up the form, and then look up the box, and that's the way you could do it as well. On the 1040, once again, it'll basically be in line 8, other income, and then other income, we're going to list that it was jury duty, and so fairly straightforward that it would go into the tax return. You do want to be careful with these items as well, however, to make sure if you're putting it into the software that it's not going to be business income. Because if it's business income, it'll be subject to self-employment tax, Social Security, and Medicare. So you got to be a little bit careful when you put it into the return. We'll talk about entering these items into the software next time and look at that. If we made a mistake and put it in and made it taxable for Social Security, then you'll see the difference and we'll see what that looks like. Then we have the forgiveness of debt, which you could receive a 1099-C, cancellation of debt. Now, this could happen when there's a downturn in the economy or something like that, and sometimes the tax law, or sometimes they put in rules that will incentivize banks and whatnot to forgive debt. But just note that when a debt is forgiven, like the bank is a business, of course, so if they forgave the debt, they were required to there's a business transaction of some kind, right? And if they just basically said, this person doesn't have the capacity to pay us, and it's going to cost us more to try to collect on it, so we're just going to settle at this point, then basically they kind of paid you. The IRS sees it as basically a payment because you owed them money and that you no longer owe them money and you didn't give them any money. So that means it's kind of like income at that point. So the IRS typically sees it as income. Now, if there is a forgiveness of debt, you want to take a look at the circumstance to see whether it would be taxable or not, and look at the actual circumstance. But if it is taxable, you'll have to report it. If you receive a 1099 on it, that went to the IRS as well. So you want to basically understand whatever position you are taking, log down that position, and make sure that you understand it. So in other words, if you do not report it or reduce the amount that are going to be included for the forgiveness of debt for whatever reason, if you think that's a defensible position, you want to make sure that you log that down in case there's going to be an audit on it or something like that you can basically show why it is that you have that, because the IRS, again, has the 1099. If you're going to report it, then it'll be reported basically in the same area. And obviously the instructions for the 1099, if they're usually be coming with the 1099, if they do not, you can go to the IRS website and look up the instructions for the form as well and get some more detail for it. Once again, it'll typically be reported, if reported, on line 8 of the Form 1040, then supported by the Schedule 1, and then other income down here, forgiveness of debt. We'll practice inputting that into the tax software too in a following presentation. Then you could have gambling winnings, which typically oftentimes will be on a W-2G. Now, if you go to a casino or something like that, every time you win something on a slot machine or something like that, you might not get any documentation for that. You could still, you should report any winnings and whatnot. But notice that if you get a W-2G, that of course means that the casino or wherever the gambling winnings are coming from, that they reported it to you, and they reported it then to the Internal Revenue Service. So now we have gambling winnings, and we're going to say, okay, now I have to report that on the return in some way because the IRS has it, or else I have to have a position or a reason why it's not on the return. Now, gambling winnings is an area where people will always ask, they will always say, well, look, I like gambling. I go to the horse track all the time. I had losses that are probably greater than the winnings. Shouldn't I be able to deduct the losses? Because it's kind of like a business in that way, right? You would think that the losses would be deductible against the income. But that's not typically the case unless it was a Schedule C type of business. And gambling typically is not a Schedule C type of business, and therefore the losses aren't usually deductible. However, they say you can deduct them on the Schedule A itemized deductions. So, but that would only benefit someone if they itemized. So, and more people are now taking the standard deduction, so it's likely that they won't benefit from that. So if they itemize, then maybe they can take the gambling losses. So just note if you're dealing with someone that gambles a lot and they have gambling winnings and they itemize, they're fairly well off, they itemize enough, they have enough deductions to itemize, then you might say, yeah, it might be worth your time to then collect your losses, make sure you can record them, and we'll record the itemized deduction for the losses, and then the gambling winnings would typically go, once again, same kind of area, different data input field into the return, but same area basically here, 1040 line 8, and then the Schedule 1, we now have gambling winnings on the Part 1 additional income. So once again, we'll kind of see how to put that into the tax software in a future presentation. Most of these items are things that for the most part, they usually aren't a big item. They're usually not going to be significant, like jury duty, gambling, winning, and whatnot, unless they gamble a lot or they're extremely lucky at some point in time. But there are things where you just kind of get this 1099, you cock your head and you go, I don't know where to put that on the software. And so you want to know, basically where they go and just basically what you can tell people about those general types of things when they come up. They won't happen every tax return, but if you do enough tax returns, these types of things will come up.